If you're a woman thinking about investing in 2026, you're actually in a powerful position right now. The market isn't a boys' club anymore. And the strategy I'm about to walk you through is exactly what I would do if I were starting completely from scratch today. This isn't about getting rich quick. This is about building real wealth through a simple, automated system that works while you sleep. And if you're new here, please subscribe to the channel, because we're breaking down the exact order of operations you need to follow, the accounts you need to open, the first fund you should buy, and how much money to actually start with. Let's dive in. First, let's talk about why starting in 2026 is actually perfect timing. The stock market has always rewarded patient investors, and women statistically tend to be more patient and disciplined with money than men. We don't chase hot stocks. We don't panic sell. We stick to the plan. That's your advantage. But you need the right plan, and that starts with understanding the 3 accounts you absolutely must open in this exact order. Your first account is a Roth IRA, not a regular brokerage, not a taxable investment account, a Roth IRA. Here's why. Every single dollar you contribute grows completely tax-free. That means all the gains, all the compounding, all of it is yours when you retire. No taxes owed. The IRS basically gives you free money by never taxing your returns. In 2026, you can contribute up to $7,000 per year if you're under 50 years old. If you make less than $139,000 annually as a single filer, you can take the full deduction. Open this account first at a major broker like Vanguard, Fidelity, or Charles Schwab. Don't overthink the choice. They're all excellent. Your second account is a taxable brokerage account. This is where the magic happens for wealth building beyond retirement. You'll fund this with money you don't need until after age 59 and a half. Roth IRAs have rules. You can't touch that money without penalties until you retire. So your taxable brokerage account is where you invest your wealth building money. You can withdraw whenever you want, though you will owe taxes on your gains. But here's the thing. If you're buying and holding index funds for decades, those capital gains taxes are incredibly reasonable, especially at long-term capital gains rates. Open this right after your Roth IRA at the same broker. Your third account is a high-yield savings account, not an investment account, a place for your emergency fund. You need 3 to 6 months of expenses sitting here before you invest a single dollar. I don't care if the stock market is down 40% and looks like an amazing deal. You don't touch retirement money for emergencies. Use Ally Bank, Marcus, or any online bank offering 5% interest or higher. Keep this separate from your checking account, so you're not tempted to spend it. Now let's talk about the amounts. Here's the exact funding order for 2026. Start by funding your emergency fund first. Calculate your monthly expenses and multiply by 4. If you spend $3,000 a month, you need $12,000 in this account before you invest anything else. This is non-negotiable. It protects you from going into debt when life happens. Once your emergency fund is complete, your next priority is maximizing your Roth IRA contribution. $7,000 per year. That's $583 per month if you're spreading it throughout the year. But honestly, I'd rather see you contribute the full amount at the beginning of January. Why? Because that money starts compounding immediately for the entire year. Every month you delay is a month of lost growth. If you can't afford $7,000 right away, contribute what you can. But this is your first priority after the emergency fund. After your Roth IRA is funded, attack your taxable brokerage account. Here's where your wealth actually accelerates. If you can invest $500 a month into your taxable account after funding your Roth IRA, you're building serious wealth. But the key here is consistency. $500 every single month is more powerful than a random $3,000 deposit 3 times a year. Automation is going to be your best friend, and we'll talk about that in just a moment. Let's talk about the actual fund you should buy. This is where it gets beautifully simple. You're buying one index fund. Not 10, not 5, 1. The Vanguard Total Stock Market Index Fund, ticker symbol VTSAX if you're buying directly through Vanguard, or VTI if you're buying through another broker. This single fund holds nearly 4,000 American companies. It's diversified across every sector of the economy. You own a piece of Apple, Microsoft, Amazon, Walmart, pharmaceuticals, energy, real estate, everything. The expense ratio is 0.3% annually, which means for every $10,000 you invest, you pay only $30 per year in fees. That's impossibly cheap compared to paying a financial advisor 3 to 5% of your assets annually. Some of you might be thinking, shouldn't I diversify internationally? Should I own bonds? Here's the truth. If you're under 50 years old and you're investing money you won't touch for at least 10 years, you don't need bonds. Bonds are insurance against stock market drops. They reduce volatility. But if you're not going to panic and sell during a drop anyway, bonds just slow down your returns. And international stocks? The United States represents the largest, most stable, most innovative economy in the world. The S&P 500 largest American companies generate revenue from all over the world. You're already getting international exposure. Keep it simple. One fund. VTSAX. Now let's talk automation, because this is where your investment plan stops being something you have to think about and starts working for you automatically. As soon as you open your Roth IRA and your taxable brokerage account, you're going to set up automatic monthly transfers. Here's how. First, your employer's payroll system. Most employers allow you to have multiple direct deposit destinations. Have $500 automatically sent to your brokerage account's money market fund each month. Or, if your employer only allows one direct deposit destination, set up an automatic transfer from your checking account to your brokerage account on payday. Schedule it for the same day every month. Second, set up an automatic purchase of VTSAX. Most brokers allow you to purchase funds automatically on a specific date each month. Set it for the day after your automatic transfer lands. That way, you fund your account on the 15th, and VTSAX automatically purchases on the 16th. You never see the money sitting in cash. You never have the temptation to spend it. It just happens. This is automation. This is how wealth is built. You remove emotion. You remove decisions. You let the system work. Here's a real example of what this looks like over time. Let's say you're 30 years old and you invest $500 monthly into VTSAX through your taxable brokerage account for 35 years until you're 65. You're putting in $210,000 total. But because of compound growth and assuming an average annual return of 10%, which is the historical average of the stock market, your account grows to $2.4 million. That's not a typo. $500 a month becomes $2.4 million. That's the power of time and compounding. And if you add your Roth IRA contributions on top of that, if you're contributing $7,000 annually, your retirement accounts could exceed $3 million. But here's the part people don't talk about. That growth only happens if you stay invested. The market will drop 20, 30, even 40% sometimes. You'll see your account value plummet. Your instinct will be to sell everything and hide the money in a savings account. Don't. You'll lock in losses and miss the recovery. The stock market has recovered from every single crash in history. Every single one. It always goes up over long periods. You just have to not panic and sell. Women actually have an advantage here, because studies show women panic sell less frequently than men. You're more likely to stay the course when things get scary. That discipline is worth hundreds of thousands of dollars over your lifetime. You're building wealth while others are losing their minds and making emotional decisions. Let's talk about the timeline for 2026. January 1st is your start date. Open your emergency fund account and begin building that $12,000 cushion if you don't already have one. By January 15th, you should have your Roth IRA opened and your initial contribution sent. By February 1st, your taxable brokerage account is open and funded. By February 15th, your automatic monthly transfers and purchases are set up. By March 1st, you're on autopilot. Your money is automatically going into your Roth IRA. Your monthly contributions are automatically purchasing VTSAX. You don't have to think about it anymore. One more critical thing, rebalancing. You don't need to do it. You're invested in one fund. It's already balanced. The fund manager handles everything. You could go 10 years without logging into your account, and you'd be fine. Actually, you'd probably be better off. You're tempted to make changes. You're tempted to panic. You're tempted to overthink. Don't. Set it and forget it. That's the system. Some final thoughts before we wrap up. Investing is not complicated. The financial industry makes it complicated because they profit from your confusion and constant trading. They want you to think you need their help. You don't. A simple index fund, automatic monthly contributions, and patience is genuinely all you need. More than 90% of active fund managers don't beat the market over a 20-year period. You will beat them simply by buying one total market index fund and never touching it. That's not an opinion. That's documented fact. As a woman starting in 2026, you have every advantage. You have decades of compounding ahead of you. You have lower trading costs than ever before. You have access to world-class index funds at nearly zero cost. You have information that was only available to Wall Street professionals 5 years ago. All of that is yours. Now it's just about execution. Follow this plan. Open the accounts, fund them, automate it. Check back in once a year to verify your contributions are happening. That's it. By the time you're ready to retire, you'll have wealth that feels impossible to build right now. If this video helped you figure out your path to investing in 2026, please hit that like button. It helps us know which topics resonate with you and helps other women discover this channel. And if you're ready to take control of your financial future and build real wealth, subscribe to the channel because we're releasing more specific videos about women in investing, how to handle market crashes without panicking, and how to calculate exactly what your investments will be worth when you retire.